In this video, we're gonna showcase an indicator that is basically an improved version of the traditional moving average indicator. We're gonna show you what this indicator is, the best settings to use when trading, and we'll also combine this indicator with other technical analysis tools to create a simple and profitable trading strategy. If you happen to find value in this video, do not forget to leave a like. Let's get into it. Now, that indicator that we're talking about is called Liquidity-Weighted Moving Averages. To add it to your chart, you're gonna go to your favorite charting platform. For me, I'm gonna be using TradingView. If you need to sign up, the link for that will be in the video description. Next, you wanna load any trading security that you like in any time frame. But for the sake of this video, you probably wanna stick with the 15-minute time frame of GBP USD. Then click on Indicators. Once you're inside the Indicator search tab, you wanna search for the indicator called Liquidity-Weighted Moving Averages. And you're gonna select this one, created by Algo Alpha. Now, the Liquidity-Weighted Moving Averages by Algo Alpha is an advanced technical analysis tool that modifies the traditional moving average by integrating liquidity measures to identify market trends more effectively. Here is a breakdown of its key components and functionality. So, unlike the standard moving averages that simply calculate the average price over a specific period of time, this liquidity-weighted version adjusts the calculations based on the liquidity of each candle bar. Liquidity here refers to the ease with which an asset can be bought or sold in the market without significantly affecting its price. This indicator evaluates the liquidity of each candle by dividing the volume by the price range of that candle. A high volume with a small price change indicates high liquidity, meaning that a significant amount of trading happened without much price movement, which is a sign of market stability or resistance to changes in price. Now, to refine the data further and ensure that the moving average isn't skewed by anomalies or extreme price movements, this indicator uses standard deviations to identify and exclude spikes in liquidity from the calculation. Now, looking at this indicator, we can see that it's composed of three elements: a fast moving average at the top, and then we have a slow moving average at the bottom. Then the space between the two moving averages is filled with this green and red gradient color. How this indicator works is similar to how the normal moving averages actually work, which is it basically identifies bullish and bearish trends in the market. A bullish trend is identified when the fast moving average is above the slow moving average, creating a green trend ribbon like this one. So basically, when this ribbon is colored green, that indicates a bullish trend. Conversely, a bearish trend is identified when the fast moving average is under the slow moving average and the trend ribbon is colored red, like it is right here. This indicates a bearish trend. Now, looking at the settings of this indicator, we can see that we can change the length of the slow moving average. For this video, we're gonna change it to 200. And then we can also change the fast MA length. We're gonna go with 100. And then we have something called outlier threshold length. This is the smoothing period for outlier candles. So this number is basically a standard deviation used by this indicator to identify and exclude big spikes in the market from its calculations. For this video, we're not gonna change this number, so we're gonna stick with 10. After that, click OK. Now, at this point in time, I know you may be thinking, but how can we actually use this indicator in real trading? Well, I'm gonna tell you. But before we do that, let's talk about the forex broker called Fintura. I've been using them for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fintura. The reason why I think Fintura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of you who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, they're going to give you a bonus of $5,000. So in total, you're going to have $10,000 to trade with. To access the bonus, as well as all the other perks, sign up to Fintura using the link in the video description. Now, let's get back to the video. Where were we? Oh, we're supposed to go over how we can use this indicator to take trades. As I said earlier, this is a trend filtering indicator, which means we would need to devise a trend following strategy in order to use this indicator to trade. Now, how do we create a strategy? Well, by adding extra indicators to the chart. So let's do that. On the indicator search tab, you want to search for an indicator called MACD. this one right here. The second indicator is called support and resistance levels with breaks. This one created by Lux Algo. Once we have the two indicators added, we would need to change some settings. Double-click on the support and resistance levels indicator by Lux Algo. And then on the inputs tab, you want to change the left bar's value to 3. For the right bar, you want to change its value to 0. On the Style tab, you want to change the resistance color to red and reduce the thickness. And change the support color to green and again, reduce the thickness. After that, click OK so we can go over how we can use these indicators to take long and short positions. So how do we take a long position using these three indicators that we have here? Well, let me show you. First, we need to make sure that the market is in a bullish trend. For that, we're gonna need this trend ribbon of the liquidity-weighted moving average to be colored green, or actually, this color is teal. So we need it to be colored teal like this to indicate that the market is bullish. Why do we need a bullish trend, you may be thinking? Well, because taking long positions in bullish markets increases the probability that the price will continue to move in that upward direction, thus heading to your take profit. Condition number 2 is to identify a momentum shift from bearish to bullish, and we're gonna do that with the help of the MACD indicator. So we just need this blue MACD line to cross above the signal line, and that crossover needs to happen under the 0 line. So right here, you can see that this is the crossover as indicated by this green histogram bar. This is what we're looking for. The last condition is that we need the most recent swing low to be above this trend cloud. Now, you may be thinking, but how do we identify the most recent swing low? Well, it's actually really simple. We just use the support and resistance levels indicator by Lux Algo. With this indicator, swing lows and swing highs are labeled with red and green horizontal lines respectively. We're gonna be looking for a swing low, which is identified by this indicator using green horizontal lines. So from this crossover candle going backward, this was the most recent swing low. Looking closely, you can see that this swing low is actually above this trend cloud. If it were to touch it even with the bottom of its wick, this whole entry would become invalid. But of course, it didn't touch it. So we're gonna enter a long position here. The stop loss is gonna go right below this most recent swing low. And for the take profit, we're gonna target 2 times the risk. If we let this trade run, you'll actually see that it turned out to be a profitable trade. Now, to understand the entry conditions even better, let's go over a few more long examples. So here was a long trade. The trend ribbon was colored teal, indicating a bullish trend. And then here, the MACD line crossed above the signal line while being under the 0 line. This indicates a shift in market momentum from bearish to bullish. And then from the crossover candle going backward, we can see that this was the most recent swing low, and it didn't touch the trend cloud. Now, it's all well and good with regard to taking long positions, but how do we take a short position? Well, we basically do the opposite of everything we did for the long positions. Let me show you. The first condition is to identify a bearish trend using the liquidity-weighted moving average. It should be colored red like it is right here. Condition number 2 is to identify a shift in market momentum from bullish to bearish. For that, we just make sure that this blue MACD line crosses below the signal line, and this crossover needs to happen above the 0 line. Lastly, we want to make sure that the most recent swing high didn't swing too high to touch the trend cloud. Swing highs are labeled by the support and resistance levels indicator as this red horizontal line, and this was the most recent swing high. And sure enough, as you can see, it didn't touch the trend cloud, which makes this entry a valid entry. Because of that, we enter a short position here. Set the stop loss right above the most recent swing high. And for the take profit, we're gonna target a risk-reward ratio of 2. If we let this trade run, you can clearly see that it did hit take profit. In summary, the liquidity-weighted moving average indicator provides a sophisticated approach to market analysis. It incorporates liquidity into the moving average calculation, offering traders a potentially more reliable method for identifying trends in the market. We've combined this indicator with 2 additional indicators to craft this simple and powerful strategy. Before considering it to be foolproof, go ahead and do your own backtesting and forward testing and see what other changes you can make to it to make it even better. Well, that's basically it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.